What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 2nd of 2019. God, it feels so weird to be switching up the years there at the end. But anyways, I hope you all are having a fantastic day, and I hope you've had a great start to your new year so far. Today, we've got a lot of different things to talk about here on the daily update in regards to both crypto and traditional markets. For crypto, I not only want to spend some time analyzing crypto markets, but we've also got some important headlines, some real merchant adoption from one of the major privacy cryptocurrencies. And along with that as well, I want to talk about the continuing developments in the regulatory environment for India in regards to cryptocurrencies and whether or not we're looking towards having a ban later down the road, or if the Indian government is kind of hopeless and should allow innovation to thrive. But outside of that as well, for traditional markets, we're also going to be spending some time to analyze the relative drop that we've seen. We opened up the market 2% down on most indices, and it's a question of whether or not we have more sell side to come. And I'm going to be spending some time to talk about my rationale on that. So we've got lots to talk about. Let's not push it off any longer and dive right in to the update. Our sponsor for this video is Energy. Energy is a scalable, self-funding masternode cryptocurrency with the goal of becoming the world's leading crypto platform. Energy is the cryptocurrency designed to employ 1 million people, leveraging the largest and most powerful treasury system in the space, all with no ICO and no pre-mine. Alrighty, so let's go ahead and spend some time taking a look over market valuations for cryptocurrencies over the past 24 hours. Some really good green across the board here for most cryptocurrencies, obviously following Bitcoin at the moment, which has been holding up quite steady. But again, no serious moves in markets yet. Altcoins are holding quite nice. As we take a look here at the past 7 days, what I really love seeing is some of these major players like Ethereum holding 20%, IOTA holding 18% as well. And the reason I picked these two out, I mean, there's a lot of other great altcoins in this whole bunch here that are up on the up end, but the reason why I'm picking those two is because they are in the top 20 cryptocurrencies. IOTA is placed at 12 here, and specifically Ethereum being up 20% is a really positive sign for these markets. Not to mention, again, even though we have to deduce some of the volume because some of the exchanges are processing, market making, or wash trading, nonetheless, we are seeing a good representation of volume here. I think if anything above $1 billion in daily volume is good to see, and we can obviously see that there is enough organic volume to justify that number. So in that case, really excited to see that we're seeing some more volume across the board. We're seeing some of these larger players doing well. Going on, though, to market overview, we can see here again, market is holding up on this $30 billion range, and it looks like it wants more. Again, this is going to go to what I'm going to talk about in regards to Bitcoin. I'm not making any long shot predictions, but in the short term, in regards to TA, it makes sense here for Bitcoin to definitely test up into the upper 4,000 to testing towards the big even of 5,000 in regards to price. And I'll go ahead and talk about that here in just a moment. But again, we can see market capitalization does not look like it wants to go down. It's been holding this base here at 130 for a long time. Holding that nice 30% rebound signals that it most likely wants to go a little bit higher. So we'll take a look at that in just a moment. And again, Bitcoin dominance, guys, if this isn't telling you that the markets are ready, at least in the short term, for a little bit of risk taking, I'm not saying we're going to get an altcoin cycle, which everyone I think has been wanting for a long time. But I do think we are going to see a little bit more risk taking. With Ethereum up 20%, XRP still holding up towards its highs, Bitcoin Cash having the major rally that it did the other day. I mean, it's looking like we're getting a little bit of risk taking here. So let's go ahead and talk about that. Now, as I've discussed multiple times before, we've got this reversal in the pattern here. As we were declining, we were getting hit by a line of resistance here, but we broke above that and have multiple times tested that level. And now it looks like we're going to come up and test to see if we can break above this 50-day moving average. The RSI is not overbought. We're out of the oversold range, which we were back a few weeks ago. So it's a matter of getting above this 50-day here. And you're going to probably figure that out in whether it is or isn't in the next 24 to 48 hours. If it can't, you're most likely going to see price come back down to this line down here, which is a good, $400 drop probably over the next few days. But I think there's a very good chance with the kind of risk taking you're seeing in altcoins, guys, to not shy away from the short-term potential of this breaking up. Now, again, if you're not trading, it's no worry. You don't have to take any action on it. And again, guys, don't just take action off my words here. I'm not making any serious significant trades here. I've already got my additions set from these lows. I'm playing more the long-term cycle. I'm just saying that I think in the relative short term that we're going to see this test up around 5,000, and it's going to get shot down probably by some resistance at the 100-day, which is declining. And again, as this moves down at the rate that it is, I think it's going to, the stars are going to align here in this sense. You're going to have a nice pop up against the 50-day, and you can, again, continue to feel some of that price action gap between the moving averages. So that's generally what I'm watching for, not overcomplicating it. Again, RSI not too crazy. The one thing you're going to need to see for this to happen, though, volume. You need volume, and we don't have that right now. Volume is still relatively stagnant. It's definitely higher than where it was back here, but if you're talking on a price-weighted basis, it's not. So that's the one thing that I'm keeping, in mind right now in regards to playing a little bit bearish and playing a devil's advocate to my target for the short term. But again, we need to see volume. Price-weighted volume is very important. We might be seeing a decent amount of volume here, but if the price is lower, it means less capital is trading. And you can go see that if you go look on across the explorers like CoinPaprika, for example. If you take a look at the actual traded volume over time for cryptocurrencies, it'll actually show you that. So anyways, again, we'll go ahead and take a look at a few altcoins here. Ether, USD, again, Ethereum doing quite nice. Again, if you get, I think it's, as I mentioned before, you'll see Bitcoin probably test up to its 100-day. If Ethereum can get above its 100-day, and then from there, Ethereum is probably going to be testing somewhere close to its 200-day. Again, this momentum's picking up. I like the volume. We're not overbought just yet. We're definitely on the higher band, but until we escape that range, we aren't overbought on the RSI. And again, we haven't seen that in Ethereum for quite some time. It's been months since we've seen that kind of confidence come back. So really good to see that. But again, not speculating too heavily anymore in altcoins. I've already got, like I said, positions built in. But I think in the short term, you could see it come test up to that range. And as it comes to test up that range, this is, again, where previous resistance and previous support was beforehand, right? Right around where this red line is, the 200-day. So keeping an eye on that as well. XRP USD, let's go ahead and take a look here. We'll go ahead on Binance here where we can get some decent stats on volume. Right now, XRP not really showing us too much of a trend. I'd like to see this pop up above the 200-day if I were to really turn confident. And again, as broader altcoins, if Bitcoin dominance drops below 50% and altcoins in general start to really pick up and volume starts to come in, this getting above these moving averages would probably signal that we could at least test back up to the highs here. Again, short-term hype, nothing too big in the grand scheme of things. I'm not saying that XRP is going to do anything close to what it did before, but I think it could very well come back up to that range that we saw beforehand. In that case, if we get altcoins popping up. Again, want to see Bitcoin dominance drop below 50%. You need to see Bitcoin get above that 100-day. A few of those key indicators, again, multiple things will drive how I trade or analyze markets in this case. Now, in this case as well, I'll go ahead and take a look at Bitcoin Cash SV as well as Bitcoin Cash ABC. Again, I like how this is starting to build into what might be a longer term breakout. You can see the highs are hitting resistance at a relatively similar level here. You can start to see support is building up. I am interested to see if this is going to pop up with SV holding this nice technical pattern, holding the majority of the hashing power between the two pairs. Again, I'm definitely thinking this might be a winner here. But again, keeping an eye on it. Haven't made any moves yet. I'll be sure to let you guys know if I do. Bitcoin Cash ABC. Let's go ahead and take a look at that. And by the way, when I say winner, I mean in the short term, guys. I really don't care to hold these things long term in regards to Bitcoin Cash. Going on here, I do like this cupping formation. What I would like to see is I'd like to see this come back to the highs, build a handle on this level of support here, and break out. That would be really nice to see. So that's what I'm going to wait for here. Again, I'll kind of indicate what I mean here. I want to see price come upwards, downwards onto this level of support, and then break out. Okay, so no crazy technical analysis there. Just again, I want to see a nice naked trading pattern in this case where it's support and resistance coming into play, because the moving averages can't even come to play here. We don't have enough days here for the moving averages to start building averages on the chart. So anyways, that's it for technical analysis in regards to altcoins. We'll do some more if we really start to see some momentum picking up. Let's go ahead and dive into the news, guys. I want to spend some time to talk about a well-known popular franchise that is, I sort of know how, but I can't believe it's gotten as big as it has. Fortnite, its merchandise store, has now accepted exclusively Manero in regards to cryptocurrency payments. So this is really good news, I think, in the short term. Speculation-wise, I don't know if this would really drive adoption for Manero in this case, to be fair. But it is good to see some actual real merchant adoption in this bear market, to see currencies actually trying to get people accepting their cryptocurrency. Not through force, but actually by building partnerships, by actually selling the value of the cryptocurrency. And I think it's a relatively fitting pair, but like, again, a privacy coin isn't really needed in the case of buying Fortnite things, unless you're embarrassed by your addiction to Fortnite, which I know some people hide it in that case. But anyways, again, not a big fan of the game, but it is really good. So basically, the retail row, which is the merchandise store for the online video gaming franchise, is selling merchandise, and you can actually pay for it in a variety of ways. You can do PayPal, other things. So I think the headlines are a little misleading in that case, that you can't use anything else. It's like exclusively Monero. But what it means is as a cryptocurrency form of payment, from what I can analyze. And again, I think this is really good to see here from Manero in this case. I'd like to see more merchant adoption across the board, but I don't think this is enough of a catalyst for the long term of Manero to actually become a currency. But then again, one step at a time, right? So again, really positive news. I'd like to see Monero land 2 or 3 more of these kind of exclusive payment gateways, and I think it could start to really build some drive for Monero. I'd like to maybe see it for example, for VPNs or things that are private centric, which would be kind of easy to land in that case. But again, love seeing cryptocurrencies do this. Congrats to the Monero community in this case. Monero is one of my favorite cryptocurrencies for its privacy features. But again, really exciting stuff here to actually see a big franchise like that land a deal in regards to a cryptocurrency. And again, if you guys want to go look through it, this is the website itself. I tried adding an item to my cart here. For some reason, when I went to checkout, I couldn't find the crypto option. Maybe they're still actually implementing it, but again, you guys can go out there and check it out. I'm not trying to shill the site or anything, just letting you know this. I actually wanted to go see what it was like and everything. But yeah, they have like Google Pay and PayPal as well. But anyways, let's go ahead, step onto the new thing here that we want to talk about, and that is the regulatory environment in India for cryptocurrencies. This has been something that back since the fall of 2017 has been on the fence. This has been a topic of discussion for a while. As China has been on the fence, as India has been on the fence, a lot of people are curious about, well, that's well over 3 billion people in the world. If you're adding those two countries together, we need to make sure that we can have positive crypto regulation here, right? Or near 3 billion. I might be getting my statistics off on population. But again, 2 to 3 billion, large amount of people. We need to make sure that they can actually use cryptocurrencies in a relatively free manner. And I think a lot of people, are they don't really kind of dig deep in this case. And I don't mean this in an insulting way, but a lot of people don't understand why India and why China. They're very similar reasons why they are scared about cryptocurrencies, right? Well, one, this is a new field. Any government is going to be concerned about this because they do have obligations to fight money laundering, to fight things of that sort, even though stuff like that goes on a day-to-day basis in the financial world, Danske Bank, for example. Outside of that, though, in all seriousness, there's another reason as well. China, and specifically India, has lost a lot of faith in its citizens as of recent over the past few years. And I've met a lot of people traveling. I actually met someone out of all places in Estonia. He was a really nice guy who, he originated from India. And he talked about the distrust of the Indian government and how people don't trust the Indian government in this case. This is why, for example, they have been, starting to change the rules in regards to a lot of the paper notes. They actually told people to bring in their previous paper notes and to exchange them for new ones. There's been a lot of interesting things going on in India in regards to the banking system. It has a lot to do with tracking money, people not reporting on taxes, with investing in properties, all kinds of different factors. It's a whole nother topic for another time. But because of that, we can see that there's this dichotomy where the citizens don't trust the government in that case. And India itself has a lot of issues with its banking system. So I think they're worried that if something were to arise like cryptocurrencies during a time of monetary instability, as we've already been seeing, I've pointed out beforehand, back a few months ago, the Indian rupee has continuously gotten devalued to the dollar over the longer term trend of things. But anyways, let's go ahead and read through a little bit of the article here. The Indian parliament was informed last week that the government is in no hurry to finalize any norms or even to set a deadline for the task. In absence of a globally acceptable solution and the need to devise technically feasible solution. It's a little bit mumbo jumbo here. The department is pursuing the matter with due caution. It is difficult to state a specific timeline to come up with clear recommendations. And I'm not going to try to pronounce that name. But anyways, the Minister State of Finance had basically told everyone back on December 28th. So to take away from this, more than anything, I highlighted a few parts down here that I think would be the best thing to take away in the sense of the lack of clarity. And again, knowing that it's going to be a while before the Indian government makes any serious moves. And once it comes the time when the shadow banking sector, for example, and a lot of the issues and the credit agencies in India come into fruition, they're going to have a whole other problem on their hands. This right now is actually quite minuscule in the grand scheme of things. It will become a bigger issue once those other issues come into fruition, but I think priority-wise, they're not focusing on it too much, and they're waiting for more technology to be developed, more adoption to come through. It's kind of like, for example, I think it was the G20 summit, where they said that they weren't even going to discuss the topic because it was less than 1% of global GDP, even at the peak of crypto. So again, that's, I think, the mentality right here for India. But I want to go over and read these two quotes. For instance, a statement in October from the government suggested that they are looking at banning the use of cryptocurrencies in India. This was, again, back in October. I think, was it October of 2018? I'm not exactly sure. However, the legal documents submitted in November revealed the government is trying to choose between a ban or regulations. Meanwhile, the Reserve Bank of India, RBI, which is like the Central Bank of India, has stifled the industry, prohibiting banks from dealing with virtual currency exchanges and traders. The industry, on its part, has taken the RBI and the other government agencies to court. So it's going to be a continuous battle over time, guys. There is no serious moves at the moment. I think the RBI, just like any other central bank, is not going to be eager to push this forward. They're going to try and stagnate it as much as possible, especially in an economy where the government is struggling to maintain control. Anything that takes away that control from them, especially the currency supply. I mean, that's the death of a government right there. If you can't control the printing of the money, it loses all its control in that case. So, or at least I think a lot of the authority that it has, being able to print or control the monies. I think it was the old Rothschild quote, where it's basically like, "Give me the authority to create money, and I care not who makes that nation's laws," something along those lines. But again, money is the lifeblood of everything. And I think if you understand money itself, you'll actually see that in the grand scheme of things. But one thing I want to talk about is some positive news. Look, we can talk about India cracking down on crypto, but man, look at how much volume we've been maintaining even in a bear market here for India. The Bitcoin volume is obviously going up, but I don't think that's a good metric to look at because you want to check it in dollar terms as Bitcoin has gone down. And we can see here, dollar volume hasn't gone away in the bear market. Very interesting to see this. I think people are doing this because they're losing faith in the government, but also because the Indian rupee is not holding up to the dollar and other currencies. Merchants need to have a stable currency. Everyday consumers need that kind of stuff as well. So again, keep a look on these data points that we have. It's very, very uncommon that you get these kind of looks into seeing things. But one thing I love about the crypto space is it's very transparent because either everything's on a ledger, or in this case, like sites like Weekly Local Bitcoins volume, it's real tangible volume we can see that's been transacted. So really good to see. Alrighty, so outside of crypto, let's go ahead and dive into equities. There has been a continued bloodbath, guys. I will be fair. I think someone had mentioned in the comments, and again, I try to read from time to time, guys, both positive and negative ones, because I do like to take criticism. Someone had mentioned that I didn't mention how the market was going up over the past few days, and I actually did. I was talking about the rebound that came through, and we actually were able to get to a point where I was thinking that we actually might have another short-term relief rally. Again, I'm at a point where I'm quite neutral, and I'll explain that as we take a look at the NASDAQ in a bit. But more than anything, though, markets open lower. The problem that people are saying is that this is caused by Asia. Now, Asian markets did take a decent hit. This is mostly due to recent reports from factories. Here we can see, for example, earlier, losses spread from Hong Kong to Sydney when a closely watched Chinese manufacturing gauge showed factory conditions slumping in December amid ongoing trade tensions with America. And I don't think really it has all to do with that. Again, the media really loves to dig deep and find catalysts, guys. There's a ton of factors at play here. It's not just one thing. Now, it may be one of the bigger factors, but it doesn't mean it's the only thing here. I think more than anything, this has to do with really rising interest rates abroad and the force on other central banks to follow suit in order to keep their currency competitive with the dollar. And again, this restricts global liquidity. This makes it very, very hard to get cheap money. And that weighs on all markets. Money moves across the world, folks. That's really how the game works in this case. So, taking that into consideration, no matter what's causing it or not, I'm more concerned more than anything, whether it's Asian factories or trade war tensions that are causing the factory issues, or if it's interest rate hikes, monetary policy, whatever. I don't care. I can take a look at the chart, and I'll tell you what I'm worried about. I'm going to go here to the Qs. Now, this line we've been talking about for a while, and I'll even take it over to the NASDAQ. Excuse me, sorry, I mistyped it. XAC, there we go. I've been talking about this line, I don't know why I got shifted over there, this line for quite some time. All right. Now, when I started to see this rebound inching very close to this line that was previous support, and though it was descending, it was support, I was thinking, maybe the price could come up here, find support, and rebound off up to the moving averages and test this line again. But it doesn't look like it. It really doesn't look like it, folks. Take a look here on the 5-minute here. All right, we're getting back up to this range here, trying to hold up here. But it looks like if we turn over later in this day, this is going to be a bloodbath for the rest of the week here, right? We're only on Tuesday here. Actually, no, sorry, it's Wednesday, my bad. We're on Wednesday here. And if things continue to go into Friday to the downside, on Monday, it is going to play out very similar to back in August of 2015, in my belief. Again, you want to see what happens if we come up here and close back up to these highs at the end of the day and maybe even get above that line we talked about. Then I'd say in the short term, we're in for a relief rally. But this gap down doesn't speak good volume in that case. And again, it's as simple as just looking at this line. If we roll over, though, I think we got a clear picture. This is ready to break down and go even lower. Again, the RSI didn't stay oversold for that long. You want to see prolonged price action in the RSI on the oversold side before we really can signal a relief rally, in my opinion. But anyways, why am I so confident that we're probably going to be seeing downside action? Well, not only is this line of resistance here, but as I've been talking about, guys, the thing you need to be watching is the VIX, okay? And it's so important. I'll talk about why that is. So as we take a look here, I'll go ahead and close the RSI here. History tells us all we need to know. If we take a look at the weekly here, let's go take a look back at 2008. So you had, first off, prolonged low volatility. This was historic low volatility for the past few years, as we can see here, going into the early 2000s. And then what happened is, after these shorter and shorter spikes of volatility, we finally get a breakout, right? We can see here it got up to the 30-point range. And then for a while, it held in this sideways pattern at a higher level. It did not revisit those lows. And in fact, it started to make what was resistance here on the VIX new support, right? You can see those relatively the range here where the VIX would start to top out, meaning that market volatility is picking up, meaning that sell-side action is usually more common. You're having bigger days to the downside, bigger days to the upside, prices fluctuating much more commonly. Well, we got to break out above that resistance. And this is a weekly chart, by the way. So after a few weeks, we really start to see the pace of selling pick up. And that's what led to really the bloodshed of 2008. Well, we can see, as historically we tend to find, volatility has lower and lower spikes, and then it starts to go into a nice prolonged downtrend where we start to see historically low volatility, as we did here in 2017. It hadn't been this low since back, I think, since the 70s. So you're talking about, I think it was somewhere in the upper 70s, so anywhere from 40 to 50 years in this case, right? Well, what happens is we have another big spike, and this breaks through that resistance, right? This was the resistance that was weighing it down here for a while. We broke through it. Now we're building that higher base, and then we broke up higher back into that range, and we started to take this line of resistance and make it support, building a higher base. And now what I'm very concerned about, as we can see all the way back in 2014, this is the range where it's best not to bet on the VIX going much higher. Like, you have these short-term spikes, but really wouldn't be taking much short positions on the market. Well, take a look here. Right now the VIX is holding on this range. If it is able to hold support here, if it is able to hold this range for the next week or so, if anything, maybe even it might just get a really sharp rebound here in the next day or so. If it is able to hold this level, it is taking this level of resistance, peak market fear, since back in 2014, or the relative range of peak market fear back in 2014. It is making it support. That means that we are much likely to see this start building some closes on the daily in this range where we only see it happen for a few moments. You can see the wicks is very thin here. This means that the market is going to start holding closes higher and higher in this range, which means we are going to see some very sharp sell side, most likely. If that holds, again, I'm just saying, it seems like we're finally starting to chart a different path. Again, as I've mentioned here, the VIX tells us where the market is going. A lot of people talk about the VIX, but they really don't use it. And I think this is one of the best things we can look at right now, is just seeing how history is repeating itself to certain degrees. But again, I think it just means more than anything that we've got some more short-term bloodshed. And I'm not even saying that it's going to be like 2008. I've mentioned before, it's going to be slower, but don't ignore the volatility here, folks. It's important, and it's important to watch, but it's also a very key sign as to what the market is telling us, what options markets on the S&P are telling us in this case. So we'll go ahead, take a look at a few of the other indexes as well. The Russell right here, holding by a thread, as we've talked about, actually looking quite nice compared to the Qs. I will give it that. But if this does, again, roll over today, that's going to be very scary. But here's the other optimistic case as well. If it turns out that we close up green today, if things go up 1% or 1.5%, let's say we have a really nice rally, I think in that case, you could start to see some of these indices go up to test previous resistance. So in the case of the Russell, it'd be up this line up here. For the Qs, for example, which we took a look at, or I'll take a look at the NASDAQ, but you probably trade the Qs if you want to trade the NASDAQ specifically. You see it come up to this range, right? You can see it come up and test this line that we've seen beforehand, and that'd actually be a nice little rally, but I don't think it's anything substantial for the long term. And then, of course, you've got the Dow Jones as well. We'll go ahead and take a look at that as well. I would probably say, this one actually has a sharper downward line. You'd probably see it come up to test this range, or maybe even test up to potentially reach this range, and it might hit some resistance around here at 24,000. So again, it doesn't look very pretty, guys. I'm not going to lie. So I'm definitely still more confident on the bearish side in that case. I'm not just trying to be pessimistic. As you all know, I've been a bear since back in 2018. But there's a reason for that. When you start to see this kind of sell-off and the exits out of the smart money flow index, just every indicator we have that can give us an idea of where institutions are exiting, we can even see institutional selling, which is people working at these companies at record levels of stock buybacks where they are taking cash off their balance sheet to prop up their stock. They're getting out, right? The cash on that balance sheet holds no obligation to them. They need to prop that into equities so they can get their shares out, so they can take their stock options out. That's how the game works. It's exactly how it happened in 2008, and we can see it right in front of our eyes. So, again, I think Apple's a telling sign more than anything because they've got a $100 billion stock buyback program, and it's not holding up the stock. So that should give you a warning sign for the market. Anyways, let's go ahead. We'll talk about some commodities here real quick. I know I've been a little bit scarce in commodities. Silver officially looking like it's ready to continue. It's finally getting that bullish nature into price action here. Now, it is a little bit overbought here on the RSI daily, but I love to see how it came back, held support on the 200-day, and looks like it wants to go higher. Now, it will inflict some resistance here because you've got 3 times here where this held support. It's going to be a question of whether or not going to hold. So we might have to test the 200-day a few more times. Nonetheless, love what I'm seeing here. No crazy TA needed. That's what it needed to do. It needed to get above that. It needed to get out of the short-term time range channel back here from August, and it did that. And it's following suit with gold. Gold is doing fantastic. I'm waiting for it to break out of this. If not, it's going to come back down, possibly even, maybe not even test the lows over here, but it might come back down to the 200-day and then rally out of it. Again, I think a lot of these precious metals are at play right now, guys. Just keep an eye on it at the moment. Now, some people mentioned, not Under Armour. Some people would ask me about URA. URA at the moment, what I like is that it didn't completely collapse down here. And again, I didn't really expect it would do that. We have seen it break below the line of support here, as we mentioned, I think, on the previous daily update or 2 ago. But the major thing that I want to see here is I want to see it get back up here. I'm not entering a position, and I have never entered into a position outside of trading way back here in 2016. My important message that I've always said, guys, is that I'm only going to enter back into this if this gets above both this line here and now conveniently the 200-day, right? So if we don't get that, I'm not making a trade on URA. And I'm definitely keeping an eye on uranium markets, but for this ETF, I'm not trading it in that case. So again, remain patient in this case. Even though we have broken down below lows, doesn't mean the trade is completely over, right? It doesn't completely break or destruct this entire amazing technical pattern that's been building up here, right? If it were, it would have been a much more dramatic sell-off in that case. But again, this is a weighted index of a lot, or it's an ETF that follows a weighted index of a lot of different companies, some of which that aren't directly always involved in uranium. They are involved in uranium in some way, shape, or form, but they're not extremely hardcore, junior miners in this case, like small cap miner companies. They aren't like Cameco, or they're literally a uranium mining company in that case. So again, you've got a basket of companies, and I would say to just keep an eye still on the uranium market at the moment. But gold and silver really taking the cusp right now. Got to hand it to them. Anyways, that's it for the video, guys. We had a lot to talk about today in today's update. If I missed anything, leave it down in the comments down below. Or if you got something to say on some of the topics we talked about, please let me know down in the comments down below. Get a discussion going as always. It's always appreciated. But again, until the next video, thank you all so much for watching. I hope you all have a fantastic day, and I'll see you all in the next video. Stay tuned.